Hi, this is Jamie Austin with Real Estate of Mind. We are here today getting real about real estate. It's real simple, real investments, and real answers. I'd really like to thank today's sponsor for our show, Pest Service Direct, for all your pest and termite needs. Call 888-909-4PSD or download the app on iTunes or Google Play. So thank you, Pest Service Direct. Now, my first guest I have today is Michael Abram. He's a lender with RPM Mortgage. But before we start with the questions with Michael, because I have quite a lot for him, just wanted to say that it's one of the most integral parts of real estate is really speaking with a lender. But a lot of people don't know that there are mortgage myths. And what is that? That's what we're going to try to debunk today with Michael. So Michael, welcome to the show. I'm so glad you're here.
Thank you so much. Excited to be here.
Yeah, so tell us a little bit about RPM Mortgage and what you do.
Sure. RPM is a direct lender and broker. Mm-hmm. So we work with over 80 different FDIC insured banks. And what that means is we have over 1,000 loan programs, and it equals a lot of diversity in terms of programs, products to offer clients. And because we're a direct lender, we can fund loans on our own money and then sell it off. So
that's wonderful.
It goes faster.
Yeah, that's true. Because sometimes there's a misconception sometimes I think when people go to mortgage brokers as opposed to like walking into a traditional bank. Right. I don't think people realize how long sometimes the process would take with a regular bank.
Exactly. Yeah. You go to Wells Fargo, it could take you 45, 50, 60 days to close. Any other retail bank, when you come to us, I might send the loan to that same exact bank, but I could get it done in 20 days.
That's awesome.
So sometimes that can make or break your deal.
Absolutely. And believe me, I've been in those make or break deals situations. So I'll start off by asking you, what do you think is probably one of the biggest misconceptions that people have about lenders in general?
Yeah, that's a great question. I think that one of the biggest misconceptions is that everyone's the same. They're not all the same. Direct lenders and brokers work with lots of different avenues. They have lots of different products. And then you have some avenues where you have retail. And that's just the big box bank. They only know that one product. They sell that one rate. It's not really their bread and butter to step outside of the box. And that's what direct lending does. That's
great. That's really important because I know that there's been some situations where if I didn't have a lender that couldn't think outside the box, my clients didn't get the loan.
Yeah,
and if they didn't get the loan, then the deal was dead no matter what. And you had buyers that had everything, they were heartbroken when they thought they couldn't get something done. Now then, speaking about that, I'm putting the shoes on of the buyer's shoes. So a lot of times when people come to me and they're like, oh, I've started looking online and I think I've found that house. And then again, my first question is have you spoken to a lender? So it tells me how serious they are and how far along they've gone down the process when I know that they've taken the time to speak to a lender. Now, as a real estate broker, I don't get any money. It's actually called a RESPA violation, but I recommend lenders who I know, like we've worked together before. I have, a handful of lenders that I really trust and know that they'll take very good care of my clients and they'll get the deal done. That's what's really important. Now, as a buyer, and I'm coming in and I'm going, oh, do I have to have 20% down to buy something in this market?
Absolutely not. In fact, in the last 8 to 10 years, we've seen a huge expansion in the products that have come out to help buyers that don't have 20%.
Even down assistance programs, right?
Yeah, absolutely.
Because that seems to be like, I know at least, it's not necessarily in this market in the rest of the United States, but I know in California, 20% down for an average house is $200,000.
Right.
That's a lot of down.
Yeah, absolutely. Yeah. So these programs have come out and they're really giving buyers a lot more of a chance to buy homes at a reasonable price and reasonable interest rates and become a homeowner. So it's been fantastic. I'm doing a lot of these myself.
That's fantastic. And this is a really big misconception. Please explain to our listeners and our viewers and put it in simple speak terms. What is the difference between pre-qualified and pre-approved?
Yeah, absolutely. A pre-qual, in layman's terms, it means nothing. It means you have literally written an application. Maybe we've run credit. I have nothing to back up anything you have said to make sure that that's accurate or not.
Oh, and buyers come to me all the time and say, oh, I make $400,000 a year. I'm fine. And I'm like, you still got to provide the info.
Exactly.
Okay. And then the pre-approval process is...
Right. Pre-approval is the full Megillah. You're going to look at income, assets, credit. We're going to put together the application. I'm going to ask every question that I can think of that is critical to getting you approved for a mortgage. It's very solid. And that's normally what the listing agents will ask us for, is that pre-approval letter that shows pre-approved.
Right.
And they're going to call me. They're going to ask me. They're going to grill me.
I would definitely do that.
My level of detail to the client's offer, because the last thing they want to do is take an offer that had very little work put into it and then burn their seller.
Right. And I've actually had friends, because there is normally a loan contingency, which per the contract is normally 21 days. You can shorten that sometimes. But I have had loans go all the way up to day 21 and then have a lender go, whoops, we can't do this loan. And I'm like, what? Why didn't you know this like up front? And it's because a lot of that front loading wasn't done.
Exactly.
Right. And then so they weren't that pre-approved. So then I've had to call people like you and a couple of other lenders and come in and save the day, because I knew that you had products that you could get the loan done. And sometimes even was able to close on time, which is really hard to do at that point.
Oh, yeah.
Yeah, I've had a couple of clients like,
It's a rat race at that point.
Yeah, and it's crazy. Nothing like light, stressful, mid-time closing there. So how important it is for people, because I know that there's another perception. I have student loan debt. I have a lot of credit card debt. How important is it for a buyer to know their debt to income ratio? And what this basically is, kind of in a nutshell, how much do you earn? How much are you paying out on credit cards and the like, and student loans and whatever, car loans? What is that ratio, and how does that affect your being able to lend and, purchase a property?
So I think it's more important to understand what goes into the debt ratio versus knowing the exact ratio, because this can vary so much between banking options. I could tell you 43%. I could tell you 55%. I could tell you there's no ratio. So you don't know necessarily how I'm doing it.
Yeah.
But what is critical is to understand what goes into that ratio to begin with, which is what you just mentioned: credit card debt, auto loans, installment loans, getting a timeshare, co-signing anything for anyone.
Right.
All of these things will impact your credit.
Yep.
So you should be aware, if you're trying to buy a home or refinance, these are things you want to be mindful of, because they will absolutely impact your ability to repay and qualify to the mortgage.
Absolutely. And what was a little side note, there was one a gentleman that I was in escrow with, and he was, had everything was going very smoothly with the escrow. And then all of a sudden he decided mid-escrow, I think it's going to be a good idea to take out a loan for $30,000 and pay my employees. And I was like, that that 30,000 just blew the loan. So it affected his credit rating plummeted, at least 15 points, to where then the rate that he was promised he wasn't going to get. So that's why we also warn buyers, one of those big time rookie buyer mistakes is that you don't open up a credit card when you're in escrow. You don't do anything weird or change anything. You keep everything status quo, unless, there's an emergency, like you had a job loss or something. But in the meantime, you don't touch anything, right?
Right. Well, the key is to be transparent with your lender.
Yes.
You want to tell them everything and anything. There is no stupid question. You want to make sure they understand what you're doing, your intentions for opening new credit cards. You're in the process of a lease maybe coming up, and you have to get a new car. We need to know these things. And if you don't tell us, sometimes we can figure it out from looking at credit.
Right.
So we'll preemptively ask you these things. But the more you share with us, the better. There is no wrong answer.
And don't you think that sometimes buyers are a little hesitant? It's almost like speaking to a priest.
Yes, absolutely. Sometimes
they're just like, then he'll know that I have a shoe fetish. Oh my God, it's terrible.
Exactly. Sometimes we really have to go pull tooth and nail there to get the answers out, because they don't want to share some of it. And it's not that we want to pry. It's just we want to be prepared for everything and anything that could pop up that impacts what you're trying to do.
Exactly. And by the way, as a real estate broker, I don't necessarily have to be privy to the details of your loans and the ins and out of your credit. All I need, because I feel like that fiduciary responsibility should be between the buyer and the lender. And then after that, all I need from the lender is what you're going to be, what the price range, what your purchasing power is, and then I run with that.
Yeah,
I don't need to know those details, because I want to keep that safe space for my clients to be able to share that. And then I'm like, I don't need to know it. I just need to know what we're focusing on.
Right. The amount of information that we see on a personal level from them is something that we are not supposed to share. Now, whether or not they open up and share share it with their real estate professional is a different story.
Right.
But that's not something I ever go into the detail of sharing.
Okay,
It's
you
not
leave it
my
up to them.
space. Yeah, I leave it up to them.
Okay, fair enough. Now, we talked about you don't have to have 20% down. What are some common mistakes that you think first-time buyers make?
Definitely with credit. Certainly you've got to be mindful of what you're doing with credit, opening credit cards, getting new loans, but also being on time with your credit card payments.
Right.
You may not think about it, but you miss a credit card payment, that'll turn into a 30-day late, and it's so fresh on your credit, it can destroy your credit.
Absolutely.
You can go from a 740 to a 690, and it absolutely can change everything on your loan. Could cost money for that same rate, may not be the same rate at all, may not even be available.
Right.
It can absolutely change the overall scope of the loan.
Right.
Another, I would say, is just being transparent again with your lender when it comes to your money.
Yeah.
This may not seem like something that's a big deal, but if you're getting a loan and there's third-party money coming into the transaction, maybe a gift,
yeah,
we want to know about it.
Absolutely.
And a good lender is going to ask you that up front when they're asking you
because
questions.
there's nothing
anyways.
wrong with getting a gift, in a substantial amount, but sometimes different banks have a different way to process that. Does it need to stay in my checking account for 60 days? There used to be that.
Right.
Now it doesn't. Now it can just go right in depending on the product.
Right.
It's all very different depending on the loan product.
Right. It's like 21 questions when we first speak, because
Yeah.
I'm kind of going through my checklist over the years of what I've gotten comfortable asking clients. But that can make or break a deal. If somebody's doing a loan where they need 5% of their own funds, and we are under the assumption that was all their money, and now all of a sudden we learn in the 11th hour that mom and dad gave them 3% of that, we have a problem.
Yeah.
And so we'll ask these questions up front to make sure. So be transparent, share that information with your lender, because it's only going to help us structure the loan correctly in the long run. So we're not calling you saying we have a problem, I have to restructure, and everybody wants to pull their hair out.
Right, exactly. Exactly. No, that's really great advice. And it's sort of the same on my end. Like, I really try to front load a lot of questions with sellers and buyers, because I feel like if you take that time initially to really understand the needs and the wants, you don't waste time, and you find out the information so that you can move forward in a really productive and expeditious way, which is great.
Absolutely.
Yeah, great. Do we have any callers on the line? So, okay, we'll be moving on with more questions. So how often can you refi a property?
So technically you can refi at will, unless there is a reason that you put a prepayment penalty on your loan. You shouldn't refi. But there's nothing wrong with doing the refi even with a prepayment penalty. If you're comfortable breaking those terms, paying whatever the penalty is to refi for a substantially lower rate, then go for it.
Yeah.
I mean, it's a...
Would the penalty payment be still, it'd be easier to pay the payment penalty as long as you're getting a substantial cut on your monthly?
I think so. If you look at the cost benefit, depending on whatever the terms are, if it made sense, then you can bite the bullet, pay the penalty for breaking that 1 year, 2 year, 3 year prepay, whatever it is, and then go for it. But in general, there is no waiting period.
So like if you know, for instance, that your rates are coming down again, somebody even just refied like 4 months ago, they can do it again if they want.
Yeah,
if
absolutely.
it saves them. Oh, that's great.
Yeah. I mean, just from personal experience, people that I did refis for within the last 6 months, we didn't think the rates would be where they are today.
Right.
And so they did a refi for whatever reason, and now all of a sudden I'm circling back saying, we're doing this again.
Isn't that amazing?
And the math makes sense for whatever they were at the time to do it again.
And the market right today it's pretty volatile. Like it's kind of, it's up, it's down, it's up, it's down, it's up, it's down. So you got to have a trusted professional in your back corner and like, hey, Michael, is it a good time to refi, and then just check in with that.
Yeah.
Because
I
think
be ready though. Be ready. If you ask that question and we say yes, be ready to pull your paperwork together right away.
Right away.
Because
timeliness is everything, because rates can change in an hour.
In a heartbeat.
Yep.
In a heartbeat.
Yep.
We get those lock alerts and it can all of a sudden be a huge change, and a deal can make sense 10 minutes later. It doesn't.
Yeah, no, that's amazing. So I'm sure you're on it all day long with checking with that. And it's been a huge refi market this year for sure.
Absolutely.
Yeah,
and we didn't see that coming.
No, it was really interesting. And also, I think the inverse is that they thought that interest rates just, for purchasing was going to really skyrocket and be close to 5% this year. And it has dropped. And the Fed's just dropped it again.
Right.
But one thing to note, though, that most people are a little confused about is that when the Fed drops interest rates, that doesn't mean that drops the interest rate to purchase a property. the drop in interest rate will help you credit card wise if you have any debt to income on like credit cards, student loans, things like that, car loans. It definitely helps you there and definitely helps you if you're going to refi. But the purchasing interest rate is kind of, it's figured differently.
That's correct.
Yeah.
Yeah, the way they track interest rates, they're not going to tie it to the federal funds rate, which is what we had yesterday with the rate cut coming from 5.25% to 5%. So you're not going to see an immediate change all of a sudden to a 30-year fix or a 7-year ARM.
Exactly.
They don't follow the same kind of rules.
Yeah, and that's great to point out because I've had a lot of people call me and say, that's, can you explain that? And I'm like, yeah, it's figured differently. That's what you got to know. But if you have any debt and you have credit cards with high interest payments, it'll trickle down to that and definitely help you substantially
it'll benefit
there.
you. Yeah, you'll
absolutely.
see it in a short period of time.
Great. Let's see. So if a client's credit is not in exactly the best of shape, and there are plenty of those, right?
Exactly.
What do you recommend? And I know that what I love about a mortgage person that really works in the totality of clients is that sometimes you might understand that the deal might not happen today because you have some cleaning up to do.
Exactly.
And then you can make some recommendations. And what would some of those recommendations be?
So the first thing we normally do is we'll run credit ourselves. Right?
Okay.
We'll do a short-term analysis of it because sometimes it's something as simple as paying off some credit cards, removing a late payment to a credit card, removing a collection. These are things that we have the ability to help and do what we call a rapid rescore to fix your credit in a short period of time.
Which is great.
Sometimes it doesn't work out like that. Sometimes there's more to it.
Yeah.
And because we're not credit repair specialists,
Right.
that's where I'll refer it out to somebody that I trust. And at least RPM Mortgage has a company that we trust and recommend.
Oh, that's
the
great.
only person that I refer out, and I've seen from personal experience helping a ton of my clients, because let's face it, there's a lot of people that say they can do it and they make it worse.
That's right.
So it's a very slippery slope. I go with who we have, referrals on, good experience, and I stick to what I know when it comes to this area.
That's fantastic. Do we have any callers? No callers yet? Okay, all right. Let me take a quick break to thank our sponsor again. Pest Service Direct, commercial and residential pest control in Southern California. Customer-focused solutions with quality service. So you can find them at www.pestservicedirect.com, and they're a fantastic company. All right, so let's circle back around. So now we've got, I looked online just to try to find some mortgage myths, and I think we've been debunking several of those right now. Like you don't have to have 20% down.
Right.
You don't have to have perfect credit. Good credit helps, and how that helps you is it helps you with a better interest rate.
Absolutely.
But if you really want to take advantage of the interest rates and what's going on, it may take you a little time to repair your credit so that you can get the better rate. And then, like you said, be honest. Right? So I think that the speaking to the lender and really being forthcoming with the lender is really that's a really important tip for today. Because I think you get halfway in, and if they haven't been honest about something, it can totally blow everything that you've been working, for the good 3 weeks on, right?
Yeah. I mean, just from experience, I have so many stories here that can share about this.
Share them.
Yeah. I mean, one would be, I asked, have you ever been married, divorced? And they said no. Oh. And all of a sudden I ran credit and I see a judgment on there that's indicating for child support. Oh, so I said, okay. So what's this all about? Because the payment's really, really big and it's on your credit. So it's stipulated by the courts to be on there. Wow. Now we start kind of peeling the onion a bit. And it's like, no, I'm not married, but I pay child support. It's not that we're trying to probe, but we have to understand and ask these questions to understand, is it a mistake? It's not impossible to think that somebody has something incorrectly reporting on their credit. So as I'm doing my checks and balances, I'm going to ask a simple question like that to make sure that I'm not overqualifying something that shouldn't be there and fix it.
Yeah, no, that's great. That's great. That's great advice. Yeah. Let's see. How long is a pre-approval good for?
So this can be between 90 to 120 days. It really depends on the credit agency that pulls your credit report, because a pre-approval is directly linked to that credit report. Okay. If the credit expires, technically your pre-approval expires.
And my understanding is some people think they pull the credit report from just one agency, but they don't. They pull it from the main three.
Yes. So as a mortgage professional, we'll go in and run it through a third party, and that third party pulls one report that shows Experian, TransUnion, and Equifax.
There you
so
go. Those are those those three big ones, one pool.
Exactly.
And then, so another thing that's been kind of big in the market is cross-qualifying. And a lot of people don't understand what cross-qualifying is. So let's say I have a buyer, I'm the real estate agent, I'm the listing agent, and I get a buyer that wants to buy my property. I might say in the MLS that I want them to be cross-qualified with Michael. Why? Because there's a lot of mom and pop lenders out there that I don't know. And I don't know if they have as good a products as you have. So I may have them actually speak to you, and so that I can get to make sure that the picture is the same.
Right. Happens all the time.
All the time.
It's a service that we like to do for our realtors, make them feel more comfortable with what they're potentially taking to their seller. And sometimes we look at a file and go, this is a hot mess.
Yeah.
How I would be very careful about taking this. And even if you take it, at least you're prepping your seller that way.
Absolutely.
And you've done your due diligence.
Yep.
And it was the best possible course to cover yourself in the transaction
Exactly. Because like I know that I've had some buyers say, you know what, I called Lending Tree, or like a company, a public company that's not local, and they're like, they gave me the best rate ever. And then, 2 weeks in, they're like, oh, well we got to charge you for that, and then this, and then this. So then the promised rate was nowhere near what they said in the beginning.
Right. A lot of bait and switch. It does still exist.
Yeah.
And you got to be very careful with those things like bankrate.com and Lending Tree, because you're dealing with a lot of online sources. You don't know where they're from.
Exactly.
I mean, they could be East Coast, Midwest. They could be out here. Who knows?
Right.
But you get what you pay for in a sense.
Exactly. And not only that, but it's kind of frustrating on my end, because sometimes if I don't hear from a lender, during the transaction, or I pick up the phone and I'm like, hey, like the loan contingencies, we're asking for the loan contingency removal. And if I don't hear from them, I'm like, uh-oh, here we go, ghost town.
Right.
And I've had lenders like not get back to me for 3 days, and I'm like, okay, now a notice to perform has to go out. I have to, pull on my mean pants and, and say, hey, if you're not going to communicate, then I'm like getting the signal that, that something's not right.
There's a problem.
There's a problem. Exactly. You mentioned something in that, I think, you know what, the thing I've heard is that rookie buyers kind of get really focused on just the mortgage payment. But I think and tell me if I'm wrong, but I think a thing that they should really focus on is more of the APR, right?
Yeah.
Because it figures in more costs. So that's more of an accurate picture of what their real cost is going to be.
Yeah, for the cost of the loan. But when we're stressing what your payments are, we're looking at that effective interest rate of whatever we quoted them.
Okay.
So if I tell you your rate is 4%, but you see an APR 4.25%, that's because the APR is rolling in all the costs on the loan.
There you go.
But that's not the effective rate of what you pay per month.
Okay, that's great. So that's good to know.
And the APR will factor in every fee, buyer fee, seller fee, fees that may not end up applying and they get revised. And we look very carefully at the difference between the beginning APR versus end APR.
Right.
So they have all sorts of systems in place to make sure you don't end up with a compliance issue. That something jumped too high on a consumer.
Right. Because there were hidden fees years ago that lenders weren't being upfront and honest with buyers.
Right.
And goodness knows, you almost have to have a doctorate in financing to like understand some of the terms that they would just kind of here's 10 pages and I'm sure it's not exactly bedtime reading, But
I like to joke around that we have to basically ask for your blood type now because the amount of
my blood type and my firstborn. Yes. Okay, here you go. I promise you can have it all. But that's good. That's good to know that, because I think people get a little confused by that.
Right.
And so that's the other thing is now they have disclosures, right, that you have to give. We didn't always have this. And it was to give the buyer time to digest the loan and the last fees. That's at the end of the transaction, because things change. The numbers change.
Yeah, you might get a credit. You might have a price reduction.
Exactly.
We will over-disclose our fees to make sure that we don't miss something.
Great.
But if something doesn't apply, it's going to go away.
It's going to go away.
But if you don't show it in the beginning, that's, a big problem for the lender or the escrow company, because you can't add anything later. And that's where you were talking about the hidden fees.
Exactly. And so what is that called at the end? What's it called in your world?
It's called the closing disclosure.
Yep.
And in the beginning, it's called the loan estimate. It looks exactly the same. Yep. It just has a different word on it. But what the banks do is they'll cross-check each document and look for variances of things that are new or increased in fee. Make sure that there's a tolerance in there, that it didn't increase by too much, and they'll allow it. or if something doesn't apply, like maybe you don't need a homeowner certification form, it goes away.
Fantastic.
Yeah.
And it's sort of like the same when they're balancing out the seller, the seller net sheet and the buyer net sheet, because at the end, if there's a credit for termite or if there's a credit for repairs or something like that, or you didn't use that private messenger, then the escrow fees adjust everything and take it all off. And then it's like, then there's a net sheet that's very different. So it looks like our conversations have lit up the caller board. So let's take our first caller. Hi, who is this? Hello?
Hi. Hello.
Hi, who is this?
This is Karen.
Hi, Karen. And where are you calling from, Karen?
I'm actually calling from Culver City.
Yay, Culver City. What question do you have for me, Karen?
Well, if you already answered this, my apologies, but we're just wondering, is it really that much more difficult now to get a mortgage? Because I keep hearing that you need a lot more documentation than you used to maybe about 5 or 7 years ago.
That's a really great question. I'll let the lender answer that.
I would actually say it's a lot easier now.
That's what I was thinking, yeah.
Because there are so many more programs now. And when the market crashed, everybody freaked out. So the amount of paperwork that we had to request, we had to do that because nobody was really sure how they wanted to play out continuing to issue mortgages. But now we've been settled. They've gotten new rules and regulations, and they've come out with new products. So everybody has it down, to a perfect science of what paperwork to ask for. And the programs out there make it a lot easier for you too. Yeah, because they have been streamlined.
Yeah, there are some products out there, Karen, that don't require you to show tax returns. Just depends on how much you have down, what your job is. So there's a lot of factors. But I think what Michael has really brought home today is that the amount and type of products is so different and vastly different than what it was like 8 years ago. They were kind of boxed in, and now we're seeing where things are not so boxed in. So it's really great. Give some more flexibility for buyers.
Yeah, absolutely.
Does that answer your question? Okay. I guess so. She got her answer and ran. So no, that's a really great thing. And I think that there's people that think 30-year fixed, whatever, jumbo loan, 30-year fixed, and then they just stop right there. Like that's their brain. They don't know that there's other products out there. So many other products.
Yeah.
And this is why I don't do what you do. You do what you do, and then I do what I do. So if someone is getting started in purchasing a property, what would you advise them to do?
First, I would say be organized. If you're going to be serious about buying, make sure you've got your tax returns, your W-2s, your pay stubs, your bank statements. These are all the critical things that a lender is going to ask for.
Everything. Just have it like ready to go.
Yeah. And be accessible. If you're getting started in this process, we're going to have questions. We don't know anything about your scenario. Right. So we want to make sure we clean it up. Make sure we've got all the corners covered, and just be there to answer our questions. Don't go dark on us for 5-6 days,
Because, if you go dark for 5 or 6 days, you're like, well, that just added another 20 days to the transaction.
Exactly.
Yeah, or it ties my hands as the realtor, and I don't know, I need the numbers from you so that I am really, focused in on, working on what makes sense for the client.
Absolutely. Yeah.
Okay, so be organized is really good. That's amazing. And any last tips for our listeners that you'd like to share?
Yeah, absolutely. If you're getting into the market and you're trying to buy your home for the first time, be excited. It is an exciting process.
Yes.
You shouldn't be scared by it.
Right.
The one thing I would say is if you're working with a realtor, which more than often I come into the picture second because they find their realtor first, trust your realtor referral partner. If they're giving you one referral.
Good advice. Did you say that? Can you say that one more time?
Yeah, absolutely. Trust your realtor referral partner. Yeah. If they give you one person, 2 people, 3, check them out. Listen to what they're saying. They clearly have worked with these people before. They know what the level of experience, knowledge, communication is like, and it'll save you the heartache and the headache of going down the path of working with somebody random or an online lender and then wanting to rip your hair out.
Exactly. That's so true. And it brings up a really good point because I know in my world, it's like I start pulling together the team, a cohesive team. And I don't recommend anybody, that I don't trust. I've been in this business long enough to go, okay, I've done something with that person. I don't like the way they work. They weren't forthcoming. They weren't timely. So you have to understand it's a cohesive team because it takes everybody. It takes a good escrow company, it takes a good lender, it takes good real estate agents. But I think, which we talked about in an earlier podcast, but basically now buyers are starting to look for properties online about 50%. And then you're right. Then they usually try to meet up with a realtor. And having a really good real estate agent is key. It just absolutely is key.
It makes all the difference.
Because in a competitive market, if you don't have somebody that knows what they're doing, which is why, my clients, like once they're my clients for life usually. They're like, oh my God, finally, when they think they have ideas about how things should be done, and then they're like, I will never not listen to you ever again. And I'm like, because I know what I'm doing. And I'm on your side, so let's work this. And you're right, be excited about it. Because this is the largest purchase that people will probably make their entire life.
Yeah, absolutely.
Biggest purchase.
And the other thing is, if you're really unsure of the referral sources of where it's coming from, we live in an age of social media. Look them up.
Look them up.
Look them up.
Exactly.
If you can't find a profile of who you're finding online, then take that as a sign that maybe you don't want to go down that road.
Exactly.
I rely heavily on Yelp. I don't solicit the referrals. These are clients that take the time to write a referral for me.
Absolutely.
And it goes a long way when I'm trying to show who I am as a lender, an individual, and let them decide.
Yeah, and the one thing I wanted to point out too, that I know that I could definitely help for even listeners that are not based in California. As the broker, I can usually pick up the phone and get top capacity talent in any market. So in other words, if you don't know of a professional real estate agent, but you want my expertise to do the screening for you, I can do that all day long. And in fact, I've helped many clients find great talent in another market, like in Florida, Texas, Nevada, New York. I've done a lot of that. So
you are fantastic.
Oh, I thank you. I'll pay you the $20 later. No, it's really huge, but that's kind of what I do. And when you have that kind of experience, it's just like we work very hard. So there's so many pieces to the puzzle to get a transaction completed, that I think the better you are, the more professional you are, just the smoother it goes. And then for those first-time buyers that are usually a little bit of a deer in the headlight for a little bit, they tend to just kind of ease back and go, okay, I'm in good hands.
Yeah, that's all you want. You don't want somebody to freak out about this whole process, because it can go either way. But with the right people there, you'll be fine. And
I've even talked some newbie buyers out of buying a property because I thought, this is just going to be a nightmare. Yeah. So it's not, I'm not always commission driven in that sense. It's more about service driven. And that, if I really don't feel like this is a really good product for you, then I will let you know.
Yeah, that's all you can do.
Yeah.
Let them, walk the path. But if you're giving them the right advice and you've been in this for a long time, you know.
Exactly right.
Exactly what you're doing.
So I think the real tip of the day that I'm going to share with you, which we'll be doing this on every podcast, is I think the real tip of the day is when you're speaking with a lender, be honest. Think of it like your priest. Really tell them everything, because you can say, I do not want to share this information with my real estate professional. Mm-hmm. That's fine. But you really do yourself a disservice if you're not honest with the lender.
Yeah. We don't want to have to restructure and figure out a solution in the middle of an escrow. The more we know up front, we can head it off. We can line it up where you may have to wait a month to do what you want to do.
Right.
But at least you know.
At least you have the information. And knowledge is power. Throughout this whole thing.
Absolutely.
Yeah, that's fantastic. Thank you, Michael, with RPM Mortgage. Thank you for being here today.
My pleasure.
And again, I really want to thank our sponsor, Pest Service Direct, for all your pest and termite needs. Call 1-888-909-4PSD. And the app is available on iTunes or Google Play. So that's fantastic. And just so a little bit of like how you can possibly reach me, a couple of ways. You can reach me at jamie@thecityofangels.com. And you can also visit us on the City of Angels on Instagram at My City of Angels. So there's a number of ways that you can reach me. I'm here for you. This show is actually for you. So if there's something that you're dying to have me speak about, please don't hesitate. Just reach out, let me know, and I'll see to it that I'll find an expert to debunk any myths we might have. So this is Jamie Austin with Real Estate of Mind, and can't wait to see you till next time.